The decisions you make today can have profound implications for your financial well-being, and it's crucial that you're well prepared to navigate the challenges that lie ahead. Let's get straight to the point. The economy is showing signs of turbulence. It's not time to panic, but it is time to be vigilant, proactive, and well-informed. To protect your wealth, you need to be aware of the key indicators that suggest a potential economic downturn or recession. Here's what you need to know. The Treasury yield curve, this is like the canary in the coal mine. When it inverts, with short-term rates surpassing long-term rates, it often signals economic trouble. Look back at the 2008 financial crisis. It's a classic example of how an inverted yield curve foreshadowed an impending economic catastrophe. If this indicator starts flashing red, it's time to take notice. Job openings. The number of job openings is a vital metric. In a robust economy, job openings indicate healthy employment prospects and overall confidence in the job market. However, when job openings start trending down, it can be a warning sign. A significant decrease in job openings could signal a forthcoming economic downturn. We've been through numerous economic cycles throughout history, and each one has taught us valuable lessons. Let's draw on that knowledge to make wise financial decisions. When you're facing the potential of a recession, there are strategies you can employ to protect your assets and position yourself for the future. Diversification. It's a term you've heard before, but its importance cannot be overstated. Diversify your investment portfolio. Spread your assets across various investment classes, including stocks, bonds, real estate, and, yes, cryptocurrencies like Bitcoin. A diversified portfolio can help reduce risk and provide stability during economic uncertainty. Defensive stocks. In times of economic turmoil, consider investing in defensive stocks. These are companies that tend to perform well in downturns because they provide essential goods and services, such as utilities and healthcare. These sectors are often considered recession-resistant, so having exposure to them can help protect your investments. Risk management. Reducing your exposure to high-risk assets during uncertain times is a prudent move. Consider reallocating your portfolio to include fewer high-risk investments and more conservative options. While high-risk assets can offer significant rewards, they can also lead to significant losses when the economic winds shift. Long-term perspective. Don't focus solely on short-term market fluctuations. It's crucial to maintain a long-term perspective when making financial decisions. You must understand that market cycles are a part of the game. History has shown that, despite downturns and recessions, economies tend to recover and grow over the long haul. But what about cryptocurrencies like Bitcoin? How do they fit into this picture of economic uncertainty? Bitcoin has often been touted as digital gold, a store of value in turbulent times. While it does have characteristics that make it attractive during economic uncertainty, there are essential factors to consider. Bitcoin as a store of value. Bitcoin has been compared to gold because it shares the trait of being a store of value. During times of economic instability, investors often flock to assets like gold and, more recently, Bitcoin, seeking a safe haven for their wealth. Assessing Bitcoin investment. Deciding to invest in Bitcoin during economic uncertainty is a choice that should be made with caution. Analyze the current market conditions, your risk tolerance, and your investment goals. Consider the potential implications for your portfolio. It's worth noting that Bitcoin has displayed significant price volatility in the past. However, it's also experienced impressive growth over the long term. Your decision to invest should align with your overall financial strategy. And let's not forget the Federal Reserve's role in shaping the economic landscape. The Fed influences the interest rates that impact investments. During times of economic turmoil, the Fed's actions are especially significant. In your investment journey, keep an eye on the Federal Reserve's monetary policy decisions. Their stance on interest rates and their responses to economic challenges can have a profound impact on market sentiment and investment strategies. Let's conclude with this important message: your financial future is in your hands. Understanding the economic climate is not only a smart choice, it's an essential one. Be prepared to adapt your investment strategy to the changing economic conditions. To illustrate this point, let's look at two historical examples. The financial crisis of 2008. Many investors experienced substantial losses during the 2008 financial crisis because they weren't adequately prepared. However, those who recognized the warning signs and adjusted their portfolios to include defensive assets managed to weather the storm more effectively. By understanding the indicators that heralded the crisis, they made informed decisions that protected their wealth. The recovery after the Great Recession. Following the Great Recession, the economy slowly recovered. Investors who kept a long-term perspective and continued to invest in a diversified portfolio saw their investments rebound. They knew that despite the temporary setbacks, the economy had the potential to bounce back, and it did. The lessons from these examples are clear. When you understand the economic indicators, adapt your investment strategy to align with the times, and maintain a long-term perspective, you can make the best choices for your financial well-being. So, what's the bottom line? The current economic situation is not something to fear, but it's not something to ignore either. Take control of your financial destiny by staying informed, diversifying your investments, and being prepared to make strategic adjustments when necessary. In this world of economic uncertainty, your financial well-being is too important to leave to chance. Equip yourself with knowledge, be vigilant, and adapt to the ever-changing economic landscape. It's time to take charge of your financial future because, in the end, your financial security lies in your hands.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel, so you won't miss any of our videos. This shows YouTube algorithm that you value our information. And it helps us spread the message. Sharing is caring.